We are live.
Hi,
Hi, Rhonda. How are you today?
I'm good.
Okay, so I am here with Rhonda DelSignore. Am I pronouncing that
Yes,
correctly?
you are.
DelSignore Mulligan. Us Italians got to stick together. She's here. She's a senior mortgage advisor with Province Mortgage Associates, and she's here to talk to us about mortgages and for home buyers and what's going on in the market. It's just crazy right now. Um, Buyers are stepping aside. The rates are going up. The news is giving us doom and gloom. I'm not one to listen to the news all that much, so you tell us, Rhonda, what's going on right now with the mortgage industry. But first, I want you to give us a little introduction about yourself. So the floor is
Sure, sure. So I have been in the mortgage industry since 1997 when I graduated from Bryant. I started working for a consumer finance company where I learned the whole background of a loan, and I was in the Boston market, so it was extremely busy. I had a long commute every day, but it was worth the knowledge that I learned in a year. And after that 1 year, I phased into selling mortgages full time. So I learned the background of financing, how to look at an appraisal, how to underwrite a file, how to look at everything, how to sell to a client. And then I focused on sales completely after that 1 year. But I like to say that I have a background that most of my competition did not have, easy because I knew how to handle problems that arose.
right. And
Um,
what do
yeah.
you think about the mortgage rates right now?
Well, it's a financial cycle. This happens. So, we forget. We've been through this a couple times in our career. And when they go up, it's Mach 10, everyone's hair's on fire and everyone's, oh no, the housing market's going to crash. I don't see that happening. So I wanted to put a positive light on our talk today
Right.
because what goes up is going to come back down. However, all the people that have been sitting in the sidelines getting that no, 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 or that felt uncomfortable waiving inspections or having to go 50 to 75,000 over, here is their opportunity right now. And I'm seeing clients that I've worked with for a year to 2 years now getting their dream homes, which is exciting, because they can negotiate with comfort now and not feel pressured, and get the house that they've always wanted. So yeah, the rates are higher. Where I see it pushed people out are that middle to lower income families that had a tight budget already. Now it's even tighter and it's difficult for them. But the whole premise of everything that I wanted to talk about was how to get ahead of it all and how to qualify and this isn't the time to go looking at houses if you don't have a pre-approval, that's for sure.
Oh yeah,
Or
definitely.
if you have a stale pre-approval, to update it with your mortgage professional so you know exactly where you stand. um, Buyers need to get ahead of the process. Vicky, the stress of buying a home, they say it's right up there with a wedding and a funeral, correct?
Oh yeah.
So why not be prepared? I always tell my clients, if you're not a past client of mine and I don't know your profile, it's like bringing all your paperwork to an accountant. You want that accountant to get you the best tax benefits, to look at everything, to advise you. And that's what we do. You have to fit that person with the right program for their profile. And when we do it, when we do analyze their profile, I can look back at someone's credit history and see how their spending habits have always been, how they are, what product I think will match better to them. We don't want to set anyone up for failure, correct? We
Oh
want
yeah.
we want them to have successful home ownership. So getting ahead of it and be able to advise someone on their credit, to be able to talk to someone and say, hey, what's your comfort zone? Hey, this is what you're paying for rent now. Have you thought about what can you afford monthly? Because we don't want anyone to not be able to sleep at night, and that's the difference, is setting people up for success. You know, when we review a profile, you can maybe look at credit and advise like, hey, if you don't owe much more on this car loan, or you don't owe much more on this loan, your payment's this much per month, why don't we look at paying that out, paying that off, or looking at, you know, possibly getting a cosigner if needed. You know, you'd be surprised too, parents and grandparents and aunts and uncles stepping forward with gift money. What a gift.
Oh yeah, I mean, I even think for a wedding, a great gift is like instead of shower gifts, because a lot of these young couples already set up with their home. They don't need pots and pans. They
Right.
give a home fund, you know.
Yes, absolutely. Absolutely. So that's another opportunity. I'll always ask someone, do you have the ability to get a gift? You know, if they're short on funds or they don't have a lot in the bank, and you'd be surprised at the parents stepping forward to help their children buy their first home. So that's the type of stuff when looking at a file that we're going to advise on. You know, putting a budget together is huge. So if you have someone that doesn't have a lot of money, what's going to happen if the boiler goes? You know,
Right.
what's going to happen when they get in those water and sewer bills, and maybe some things that they didn't expect. We try to go over all of that up front. And in the state of Rhode Island, we have access to Rhode Island housing products, which are fantastic. You know, it's a way to get someone into a property with 100% financing if they qualify. They're still offering that $10,000 loan that doesn't have to be paid back until you sell or refinance. So that's a nice way for someone to get money towards their down payment. They also have the $15,000 that they can lend towards a down payment, which is exciting as well. That one you pay on up front, but it works for people that don't have the funds or want to save their money in the bank. You know, Vicki, when we talk about rates today and we talk about, you know, bidding on a property, I'll always explain to someone that for every 5,000, it's a certain dollar amount so they can visualize it, you know?
Right.
In this market, like say for example, if you take a 7% interest rate, for every 5,000, it's just over $33 a month. Think about that. You know, we walk into CVS and we probably spend that.
Oh God, yeah, especially in the makeup aisle.
With no intention, you know, or going and grabbing fast food. And I always say to my clients, you'd be surprised when you own a home and you buy your first home, you tend to stay in a little bit more and nest and work on that house. So yeah, you know, after that first mortgage payment, people get used to it, but still we're working within their budget to make sure they feel comfortable with everything. That way they're not shopping for a $500,000 house when really they feel comfortable at 325. But if you think about it, you know, I'll always say to someone, do you want to lose that house over what would cost maybe an inexpensive night out to dinner, you know, just to be able to visualize it when they're
Oh,
coming in
absolutely.
at an offer, or if there's multiple offer situations, to come in strong to get that offer accepted.
So I want to interrupt you for a moment, Rhonda. We're
Sure.
having a little technical difficulty here. Our voices are popping up, but not our pictures.
Oh, okay.
We'll just continue. I'm going to try to figure it out in the background, but I
Sure.
just want to let everybody know that I'm aware of it.
Okay.
So with interest rates, I mean, I'm hearing a lot of buyers are just backing off because the interest rates are so high, and they're waiting for the market to crash, which you and I both know that's not happening.
No.
What you want to give your opinion on that, because that's like a big issue right now, and
Sure.
you hear about the doom and gloom on the news too about that
Sure.
as
Exactly. So I don't see the market as crashing. Okay. What I have seen is that home prices are leveling out. Okay. Where I'm seeing sellers take home sale contingencies, I'm seeing seller credits back in the game. I'm seeing people being able to negotiate. That is huge for a home buyer. So you got the perfect storm right now, right? Where you
right.
can come in and finally feel comfortable and have an inspection on the property that you're going to buy and be able to reasonably negotiate. This market is different than the past. So do I see it crashing? No, because people still have to qualify. There's a shortage of rentals right now. The landlords have caught on that they can charge much more than they were before. So think about it. It's an opportunity for people that maybe didn't want to look into buying to finally look into it, because wouldn't you rather pay your own mortgage than somebody else's? Um,
Oh, absolutely. I mean, and the rent is so high. I mean, in some case, a mortgage is cheaper than the rent that you'd be paying.
exactly. And then it's all about the product. So people are going to have an opportunity to refinance next year. You know, um, when the Fed will actually say that we're in a recession, we're going to see rates start to come back down. And I was reading an article this morning on Fannie Mae and Freddie Mac, and they're predicting in 2023 that rates will bounce back into the fours. So, again, someone can get a house reasonably priced right now because there's less competition. Once those rates come back down and everyone starts to jump back in the market, you know how it goes. Then those bidding wars are going to start again.
Oh, yeah, definitely. And once the spring market comes, I definitely see that happening.
Right. And you think about it, when the market crashed in uh, in 2007, I remember because I was getting married that year, and I remember May of that year, and banks just started shutting down.
Oh,
During
yes,
my,
I
during my
remember.
workday, it was very, very, very stressful. But that was kind of the overflow of the subprime loans, and uh, the no doc program, so to say, where people didn't have to show their income or anything like that. It's much different now. People actually have to qualify for a loan. Um, we have access right now to low rate, adjustable rate mortgages. And I always say there's a certain client for that loan, the savvier clients, maybe the people that have owned before or the people that haven't owned before, that, have their stuff together, so to say, meaning they have money in the bank and they know what they're doing. It's a way to get into a house much more affordable, much lower than where the current rates are today. And you can get into a 5, 7, or 10-year arm where it's not going to adjust for 5, 7, or 10 years. But it's a way for people to get in lower and feel a little bit more comfortable with their mortgage payment. There's also they brought back the non-qualified mortgages, meaning that the loans that aren't Fannie, Freddie, or government loans, and we have access to asset programs and bank statement programs. And those are for the people with decent credit that are asset heavy, but maybe don't show a lot of income on their tax returns, like the self-employed borrower or the people that had retired, and are living off of the assets that they saved their whole life, those interest dividends and so on and so forth. So there are products available. So do I see the sky falling and that, oh my God, if you buy a house now, it's going to be worth 100 grand less in a year? No, I don't see that happening at all. And I would love to hear your take on it as well, Vicki.
Oh, I definitely don't think we're going into a, what they call the 2008 market, which
Mm-hmm.
I hear all the time. They're people waiting for the foreclosures to happen.
Mm-hmm. Mm-hmm.
And that was a tough market to be in, and there was a lot of properties on the market, but there was a lot of junk out there. We were
Yes.
dealing with things we've never dealt with in our some of our careers. We
Mm-hmm.
were dealing with homes with mold and heating issues.
Sure.
There was a lot of obstacles to overcome. As far as I'm concerned, anybody that got through that market deserves a Purple Heart, that they're still in it.
Absolutely. Absolutely.
So what I find is that it's really a good time to buy right now. And the expression is, and let me see if I get this right: marry the house, date the rate.
Yep. Yep.
Right? I got
Correct.
it right. Um, you can always refinance later down the road. You know,
Absolutely.
you can't change the price of the house you're buying. The
Right.
house is going to go up. They're going to go up. In the spring market, it's going to be a spring market. I do think it's going to be a good spring market. But again, everybody's waiting for this doom and gloom to happen, and it's not going to happen. And I'm finding the buyers that are out there that did sit on the sidelines, now they're getting worried because the houses did go up and the
Yep.
rates went up. So now they're in a different price point that they could look at. And it's really, I mean, and I find actually the best time to buy a house is this time of the year because you don't have as much competition. Because once the holidays start coming into play, more people are prone to sit back. They want to wait till after the holidays, enjoy the holidays. Me personally, I've always moved at a holiday time.
Hmm.
Always get the best deals. You have less competition. So I really don't think it's a good time to sit on the sidelines. You have to do what's good for you.
Yep.
And you don't like you always know when it's the right time to move.
Correct.
You have to do what's good for you. You have to know when some people wait for school to be out, some people wait for the summer, but then like you're waiting for those times, for summer and spring. You got like maybe 10, 20 buyers that are going after the same house when you're
Sure.
around this time of the year in the winter and the fall, and you're dealing with maybe two or three buyers.
Yep.
And maybe the sellers might be a little bit more negotiable because sometimes, you got these tax situations where
Yep.
people want to sell before the end of the year, or maybe people want to buy before the end of the year.
Absolutely.
So I
Yep.
really don't think people should get sticker shock with the rate. I think you should really just go for it if that's something that you need.
Yeah, absolutely. Again, for the folks that have been looking for the last year or two or sold their properties and went into short-term rentals and are watching, now's your time. Jump out and keep an eye on everything. And I'll even advise clients, like, don't not look, look, because then you're gonna know what you want. Even in certain price range buckets, Vicky,
Oh yeah.
there's a big disparity. And I'll always say to a client, go look, in different price buckets, because you may see where you thought you needed to be that these houses need total renovation. You might go up a little bit and it's move-in ready. You'll know as you get out there and start looking, and it's real estate. Pictures can be deceiving.
Yeah.
Go to the open houses, go to the showings, ride by the neighborhood, see if you like it. But that's why, people need to deal with a real estate professional. And Vicky,
I
every,
know what you're going to say.
when the market's booming, everyone wants their real estate license, right?
Oh
And
yeah.
I'll say to people, know who you're working with, like Google their background, see how long they've been around, make sure they can answer your questions, because that makes for a successful real estate transaction, is when your team is your advocate and they know what they're talking about. I find a lot too, people get their real estate and mortgage advice from their friends, their family,
Yeah.
people that always do not know what they're talking about.
I
Um,
always I always say whenever I sit down with a client, I always tell them when you're looking for a home, everybody family
yep,
members and friends are all going to be loan officers and
yes,
real
yes,
estate agents.
yes. And we have to go through licensing. So I'll say to someone, I'm sorry, does so and so have their mortgage license? Is that what they do for a living? And the other huge thing I want to hit on is everyone's scenario is different. Everyone's personal profile is different. You may be having someone speak to you that had very little in bills, excellent credit, and a lot of money to put down, where that person may be in a completely different scenario or different time point in their life, different profile, So always know that everyone's situation is individual. You're not just like your friend who bought with 20% down 2 years ago when rates were at an all-time low. Um,
Right.
it's based on the individual, which is very important. And there's so many mortgage products to suit people's needs so that they do feel comfortable. And if they're strapped, we're going to see that and they're going to tell you, there you are.
Here we
How
are.
are you?
I've been chatting in the background with them.
Oh, I like your backdrop there. Very nice. Very nice. Like I said, again, it's getting ahead of it. It's not trying to get pre-approved because you just went out to a house and now Now you want to make an offer, but you've never had a mortgage professional look at your profile before. That's a
Right.
waste of everyone's time when you're dragging an agent out and you really don't know what you qualify for. And I find too, Vicki, and you can say this as a realtor, you'll have customers come to you, oh, I want a 4-bedroom house, I want 2 baths, I want the in-ground pool, and I want to pay $300 for it.
Yep.
You can educate them on what they're going to get for their money and where to look, what towns and cities.
Well, I always tell people, I try to use a lot of analogies, and I always say, it's like going shopping for a Mercedes,
Yes.
and all you're looking at is Mercedes, and then
Yeah.
all of a sudden you go for your financing and you can only afford a Hyundai. Now you got on your head, you want that Mercedes. So those
Right?
Hyundais are not going to look good to you anymore
Yes.
because you already saw the Mercedes. So you have to do your due diligence. And I'm a firm believer before I take anybody out is to make sure they get pre-approved, because as a real estate agent, how am I supposed to help you if I don't even know how much you can spend? And
Right.
you know as well as I do, is like there's terms too.
Yeah.
Sometimes taxes in the town that you're looking in can play a big difference on if you're approved for the mortgage or not. Am I correct?
Absolutely. I'll tell clients, real estate taxes will swing a payment more so than down payment. And that kind of shocks them. So I'm like, when you go look at a listing, look at that MLS sheet, see what the taxes are. I can tell too, I'll always get when I do a pre-approval for a specific property or I get the contract in, we always, will look, what are the taxes on the MLS sheet? I can tell by certain cities and towns if there's certain exemptions on
Yep.
those taxes, meaning like, hey, there's got to be these seem way too low, just to be able to set the expectations for the client correctly.
Right.
A lot of people may be getting elderly exemptions or veteran exemptions or certain things. So yes, we want to know what are the taxes on that property. Want to look at what type of utilities are on the property as well, right?
Yep.
Whether it's a
Exactly.
septic or sewer, and make sure that the buyers understand all of this. And
Yeah, I mean,
for their financing, there's certain inspections needed, especially on the government loans.
oh, absolutely. I mean, you're only as good as your team behind
Yep.
you. I
Yep.
see that. I can't say that enough.
Mm-hmm.
And when you have everybody on the same team, your loan officer, your realtor, your home inspector, your attorney,
Yep.
um, we all work together to make this happen for you. There's a lot that goes on behind the scenes that people
Absolutely.
don't even know, and
Yep.
we all like tear our hair out of our heads, like, "Oh my God, can you believe this?"
Yep.
Um, but we don't bring it to the client because we want it to be a happy experience for
Correct.
them. And
Correct.
it's really nice to be able to tell a client you're clear to close. Like I always say, those are the best 3 words. Then I love you is clear to close, and the
Yes.
deed's recorded.
Yes. And I find too, like with the first time home buyers, I'll always say to them, this house is an asset for you. It's an asset for you. You take care of it, you pay on time, you're going to build up equity and to try and make them realize this is, in some cases, this is your first house. This is your very first house. So financially, make sure you feel comfortable with it, but it's going to be a stepping stone to when you're ready to upgrade.
Right.
Because let's face it, everyone wants instant gratification. They all want that $700,000 house with all brand new and every bell and whistle, but it's not reality. So we try to put that, into perspective for them that this is an investment. This is an asset for you, but it's also a tax, it's going to tax benefit you as well. And people don't understand that. But I remember, back when, remember we used to look on Rhode Island Living all the time? How many years ago was that?
Oh, gosh.
That used to be the place before Zillow. That used to be the place to go to look at real estate. And they had a fantastic ad one time or an article, and it talked about the net worth of a homeowner versus a renter. And wow, you know, it was a pretty powerful ad for people, but that's what I try to put in perspective for people. And you know what? Over the last 2 years, when I had clients calling in and they were able to sell and upgrade to their dream homes, it was very rewarding to see the type of money they walked away with from
Oh,
their sales,
yeah.
and finally they could see the fruit of their labor that, hey, I bought this house and she was right. I was able to now upgrade and buy my dream house. And in some cases we were able to utilize some of those funds to pay off debt and do a down payment and stick some cash in the bank. So that's the type of analysis that we're always going to look at for people so that they can
That's great.
successfully upgrade. Yeah.
I mean,
Yeah.
it's so nice to help people get to that goal. You and I have been through it personally, and I
Mhm.
mean, even though we do this for a profession, it's still stressful for us when we do it.
Absolutely. That's what I say to a client. It's normal to feel to feel nervous.
Yes, I love that saying. It's normal
You
to
know,
feel normal.
it's even when I would buy and sell real estate, I would be nervous. It's it's a stressful situation, but to know that your team's in the background, walking you through everything, guiding you, and yes, we don't, they don't know all the stuff we do behind the scenes to make sure it goes successful for them.
Yeah, there's a lot of negotiating behind the scenes with home inspections and things like that. I also always say, like with the crazy market we're in, some buyers are waiving home inspections, which I highly don't recommend.
Right.
I have to say, in this crazy market, there's not one offer that I had accepted and we've closed that we waived inspections. I
That's
just don't
great.
think that's a good
Yeah.
idea to do, but that's, you can only tell people. But another great thing to do is like when home buyers are starting out, ask for, if somebody's looking to give you a gift, ask them to get you a home warranty,
Yeah.
something to help you along the way. But
Sure.
the market right now, I still think it's pretty good. I mean, every area has its own story.
Sure.
There's some towns that are doing better than others, some cities that are doing better than others, some states that are doing better than others. So you really need to talk to your, local mortgage professional like Rhonda,
Mhm.
um, and ask them for that pre-approval, because if you don't get that pre-approval before you go shopping, you're pretty much going blindly and you don't know what you can do. It's
Yeah.
it's hard to look at something and you don't know if you can afford it or not. Because I'm going to ask you this: how many times have you had somebody? Well, this is what I always say: the realtors get Disneyland, you get the horror story.
Mhm. Mhm.
So I always, when I meet somebody, I always tell them, talk to your loan officer, because how many times you get somebody and they think their credit's great, but
Yeah.
there's something back in their credit they don't even know about that's preventing them from even getting a mortgage.
Well, yeah, and I always say to realtors, there's a lot we do on our back end that we shelter from you as well. Clients, my team actually does a thorough review. We actually look at the documents, which is huge. We don't wait for an underwriter to look at it. We look at it first. That's where we'll catch divorces, name variances to tip us off that maybe someone was divorced, or they'll put on the application whether they're married, single. We can see if they have children. That triggers us to ask, do you receive or pay child support? I can tell a lot from someone's tax returns, and a lot of the times they'll say, well, I don't know, my accountant filed that, my accountant did that, then sometimes we have to have a conversation with the accountant as well. But we're doing all the scrubbing and the sweeping up front, so that way, and I'll say to a client, let me get all of this and look at it up front, so when you go to make an offer, you can feel 100% confident that you can make that offer and that nothing's going to come up, because I would have went through everything with you already.
And that's important, because when you have a loan officer like yourself that does that, it makes my job much easier, because I know your reputation in the field, so I know when I give a pre-approval with your name behind it,
Yep.
other realtors, that the listing agent looks at that and says, okay, we're
Oh
comfortable with
yeah,
this.
and I get excited when I know the listing agent, because they know, and they'll say, I'm accepting this, Rhonda, because of you. I know it's going to close, and listing agents are doing a great job doing their due diligence. If an offer's in the running, I get a phone call. They want to make sure I looked at the documents, and kudos to them for backing up their seller. That, hey, how solid is this person? Did you actually pull their credit? Look at their W-2s, and I'm like, of course I did, and
Mhm.
it's usually a person that maybe I haven't worked with before. We're also doing what's called TBD pre-approvals, meaning it's an underwrite on a file. It's a full underwrite on a file, and the TBD means to be determined property. So
Mhm.
when I say to an agent, oh, here's the pre-approval. By the way, their file was pre-underwritten. They're ready to go. They just needed to find a house. Then we put it in. We order appraisal title, when you're
That's
ready.
great.
And that has gotten our clients accepted offers as well, because they feel better when it's already been looked at by an underwriter. But we're going to pre-screen it first on our end, put it together, note it, get it in. and have those folks all set and out on the road. And it really, really does give a client peace of mind that they're
it definitely gives the listing agent peace of mind too, because you know that they went through all the nonsense and nothing's going to pop up
exactly.
midstream
Yeah,
unless they lose their job or something like that. That's
exactly.
nothing
Yeah,
unforeseen.
we hand out a form that says the do's and don'ts during the mortgage process, and I really go over that with the clients because a new car loan could throw things off. Having a collection pop up when we do that soft credit pull at the end. I'll tell them we're going to do a soft credit pull at the end. We will find out if you opened anything new, if you went delinquent on anything, whatever. And it's great when a client will call me to say, can I buy this? Or can I go to this concert? Can I pull this money out? They don't want to mess up their process.
Right, right.
I'm happy about it. It means they listened.
Well, that's good. That means you're explaining it very well to them, because I have had it where buyers had went and bought the furniture for the house at Cardi's and
Yep.
charged it, or
Yep.
came to the inspection with a brand new car.
Well, the other thing too, I feel like mortgage originators miss is those credit inquiries. We have to ask, why did so-and-so pull your credit back on this date? And sometimes, it takes a little bit for creditors to report to a credit bureau, at least a month from when the client opens something. So that's something we have to go over as well. But right at the very end of the credit report is where you catch the name aliases and the credit inquiries to be able to ask those questions. And those are usually the things that could throw stuff off. I want to mention something else. What we've seen a lot on credit reports, especially in the last couple of years, Vicki, with COVID, and I see a lot of consumer loans being taken out, a lot of consumer loans. Clients taking cash advances on credit cards, and that cannot be used towards an EMD, towards an earnest money deposit check on a property. So I say two things to realtors. When you get that earnest money deposit check, make sure it's made out by the person who's on the loan. I had a realtor once write the earnest money deposit check, and I'm like, why would you do that? We can't accept that, right? So
no, do that at all.
Right, to make sure that check, that money came from the person on the loan. Okay, that's important right there. But also, when we see a trend of this client taking out personal loans, and I will always ask, what did you take that loan out for? Especially when it's in the last year. Often it was to move debt around, to pull out cash. Some of them stuck the money in the bank, so and that tells us a lot about someone's spending habits. Maybe they're more.
You have to show that you're a responsible borrower.
Right. But these companies made borrowing too easy for people, meaning like these consumer loans, and that's how they get in trouble, because they'll consolidate one, and then I start to see the credit card debt getting racked back up, and that will usually tell something's going on in that person's life. So there's a lot we look at as a mortgage professional on our end, even on the tax returns.
Oh yeah, you can see that.
Very important on the tax returns. Did they owe money the last couple of years, or did they get money? If they owed money, we'll always ask, did you pay that tax liability in full? If they didn't, they could owe the IRS. And if there's a payment agreement, that can throw off the budget too.
Right.
And every month I get calls from realtors saying, I have a deal blowing up, Rhonda. Can you look at it? Can you give your advice? Can you look at it? Can it be saved? So on and so forth. And a lot of times, I'd say 80% of the time, it's because the customer didn't disclose certain information, or the mortgage originator didn't look at that file correctly, and it got caught once it went into underwriting.
Yeah, that's a shame that it got that far to that point. Two things before we go. We're running towards the end of our time.
Sure.
I hear this a lot from a lot of home buyers. Number one, how do closing cost credits work? And number two, if you're getting a gift from a parent for your down payment, how should they handle that? I always say, speak to the loan officer, and they'll just tell you.
Absolutely.
But I hear you give us the answers.
Sure. So a seller credit can be utilized towards closing costs and prepaid items. That's how it has to be worded on the contract. Okay. So, I tell clients like, hey, if you don't want to deplete everything you have, or if they're short, Vicki, and they can only come up with the down payment, I will let their agent know ahead of time. These folks are going to need a seller credit towards closing costs. That way, like you said, the whole team is on the same page. And this is often to help a client get into a house, or to be able to not deplete everything that they have. And those closing costs can be utilized to help buy down the rate a little bit, and everyone thinks there's an exact formula. Like, oh, if I pay a point, I get the percentage a point lower. No, it all depends on the yield spreads that day that the banks are paying. And that's how we determine, okay, I'll go over different options with a client, what I think makes sense, or whatever their needs are, what they're telling me, and we'll see what makes the most sense. Because sometimes a point can buy it down a little bit where it's only saving them X amount of dollars, but it doesn't make sense to them to pay that extra $3,000,
Right.
But the seller credit, I feel, most helps someone keep their money in their pocket. Especially if they know, hey, Rhonda, I got to put in rugs in the bedroom, or I got to buy my utilities. How can I save some of my money? And I see a lot of agents pick up the seller credits after inspections.
Well, I want to say about the seller credit too. When there is a closing cost credit, I think there's a big misconception because buyers think the seller's actually paying it, and sellers think they're handing the buyers a check.
Right.
They're actually financing it, and the seller
Right.
is giving permission on paper to
Yes.
forward that extra money
Yes.
over to the closing cost. So, say for instance, if you're buying a home for $500,000,
Yep.
you need a $10,000 closing cost credit.
Yep.
Then your real estate agent should say, the offer should say $510,000
Yes.
with $10,000 for prepaid, closing costs, and
Yes.
escrow.
And
Right?
that's how I explain it to a client. So if you want to come in on a house at 275, but you want $5,000 towards closing costs, you're going to offer 280 with 5,000 back. It's a written formality. No one's handing each other cash. It comes off at the closing that 5,000. The seller's going to cover 5,000 of your costs. Then it makes it a little bit easier for them to understand.
And I find out no matter how many times I've done this and how long I've done it, they never understand it.
You know what? It's not their thing. It's not their thing. So I usually will say,
They get bitter with it. It starts to become a bitter battle between the seller and the buyer because they feel like the seller should take it out of their pocket and give it to them, and the seller feels as if they shouldn't be handing them a check. I mean, there's been some sellers that will say, "Well, if they can pay 510, why am I only getting 500?" And no matter how much, and I've had it where if I've explained it, the loan offers explain. You get some people that are stubborn and they're just not.
Yeah, I tend to, when they see that closing disclosure and you see the balance sheet and the credits, I'll always say your deposit money doesn't get lost in space. That
Right.
comes off of your down payment, i.e. your closing costs. Like it's being credited for your transaction, because people say, what about my down payment? Where did that go? Or what about this? And then when the attorneys at the closing kind of go through the lines, this is what you paid. This is what your closing costs come to. Here's your seller credit, this, that, the other. It starts to make a little bit more sense. But yeah, it doesn't make sense, Vicki, to the average person. It really doesn't.
It doesn't.
Sometimes we have to explain it.
Now, what do you do? Like, say mom and dad want to give a gift to their kids to help them buy a house.
Sure.
I know there's a process for that. And some people just take the money and they deposit it, and it turns into a little bit of an issue there because there's a certain way to do it. So how would you go about that?
Right. So I say to them, please do not take a gift until I walk you through how to properly do it. And we handle it in different ways on different programs. So for conventional financing, it's different than the government financing. But I find when I prep everyone up front, they prep mom and dad, or I'll say, have mom and dad call me, let me walk them through it. And then once the transaction goes live, Vicki, we provide a gift letter. I'll tell them, give me a copy of that check. Make sure whoever's names are on that check, sign the gift letter. But we walk them through it to properly do it, because you don't want someone taking a gift from Uncle John, and then Uncle John had mattress money that he gave him, and it can't be paper trailed, because people really think the mattress money or the money in the house in the safe should be able to be used. How
Yeah,
dare we question it?
it has to be seasoned.
Yeah, I had one person say it was so cute one time. She said, I'm just an honest Portuguese woman because she had the money in the house. I said, I know you are, but we can't accept that as a down payment. It would need to be seasoned first, you know? But yeah, and I told you I'm a big fan of gift money. It helps a lot of people. And what a better gift. I hope to do that with my kiddos one day, you know, get them into their first house and with a little bit of help. So
No, I mean, this has been absolutely very informative. I hope everybody else found it informative. Rhonda, if anybody wants to get in touch with you and use your services, how could they do that?
sure. So I'm all over social media, LinkedIn,
Yes, you are.
Instagram, and Facebook. It's Rhonda Mulligan Mortgages. My cell phone is 401-480-0462. It goes off all day with phone calls and text messages. So anyone can feel free to reach out to me anytime for any information, second opinions, help with anything, how to solve a problem. I'm here for everyone.
And I'll also post Rhonda's information in the feed. So if anybody wants to get in touch with Rhonda, please feel free. This has been really great. Is there anything else you wanted to add?
Oh, I think I covered my hit list here. You know, I want to end it with the conforming loan limits are going up as well. Many banks have already implemented those too. Vicky, you and I were just talking about you have some new construction developments coming up. I know people love new construction, and I heard in the last year people saying, well, there's not enough houses coming up, not enough builders building. So maybe we'll start to see that swing a little bit. They just need the land, right?
That's the issue that I'm in, finding the
But
land.
also stay positive because all these high rates will be able to be refinanced down probably within 2023. That's the industry prediction. Also, there's a product for everyone. There's something for everyone to feel comfortable. So we do have things up our sleeve to make customers feel more comfortable about their payments, and again, it's all based on people's individual budgets. So I agree with you. The news can sometimes be all doom and gloom. It depends on what news channel you watch or who you speak to. But if you speak to an industry professional, they'll tell you, it is, some people shouldn't be buying right now, but others should, and it all depends on each person's individual profile. So we'll just keep continuing to share ideas and what's going on in properties. Like I always share properties. I watch, the Rhode Island and Massachusetts market of what's going up. Connecticut too. I'm finding a lot of people are going over the line and buying much more affordable in Connecticut.
As well, yeah, it's a little.
I can't believe the prices. It's like where Rhode Island was in the past. So it depends on everyone where they want to live. Everyone has their own idea of what they need and what they want, and it's based on their family background. And
Right.
a lot of blended families now, Vicky, where and a lot of people that need kids in certain school systems or need to live near their children. You got people selling and downsizing.
Yeah, we've actually seen a lot of this past couple of years.
Absolutely. And then you got those first time home buyers jumping in, trying to buy something affordable, where right now is a good opportunity. Again, I keep saying it for the people that have been on the sidelines watching, jump in and get a house now.
Oh yeah, I mean, you know what? People are worried about rates, but I always say this story. My first home that I ever bought was 11.8%.
Yep.
So
Yep.
think about that and what it is now. I mean,
Yeah.
and you refinance later down the road.
Yeah, and I want to say my first house I bought too. I think I had a 7% rate. That's where the market was.
Yep.
Yeah, and it's all relative. So
It is, and you refinance. I mean, it's always going to fluctuate. So it's very hard to determine, is this the right time to buy? Because
right,
the rate could be really low in the next month before you even get into a contract. They can go up again. So
right,
you just
right.
have to buy it based on your needs and
Sure.
at the time.
Yeah.
But I appreciate your time, Rhonda. This has been
Thank
a great
you.
conversation. I'm sorry for the little mishap for the technical difficulties in the beginning, but they fixed it on the back end,
Perfect.
thankfully. And we'll have to do this again real soon. And again, if anybody has any questions, type them in the chat. Rhonda, she'll watch the chat. I'll forward it to her. She can answer your questions, and I will have her contact information in there for everybody. Thank you, Rhonda. This has been wonderful.
Take care.
Have a great day, everybody.
You too.